Hello everybody, I'm Ben Bravoke and I love finance. I work in finance and I've invested for a long time and made good money doing it. I've enjoyed showing everyone around me the importance of personal finance and how it can benefit them. Today I'm going to be going through setting up your first trading account with Trading 212 and show you how to make your first investment. This video is going to be fairly unique in that it's going to go through every single step of the process. It's going to show you how to sign up, how to deposit money, how to use the sign up bonus to get free stocks when you do this, and I'll show you exactly how to make your first investment. I'm also going to talk about how you can identify the best stocks to invest in to make sure that you maximize your returns and keep your money as safe as possible. The first step in your investing journey is to download the Trading 212 app on the App Store. Alternatively, you can go through their website. The reason I suggest Trading 212 is that they're headquartered in the UK and they're regulated by the Financial Conduct Authority. The FCA is the gold standard in regulation, and this means your money is safe. In this case, I've done the work for you, but if you're looking at other providers, make sure you do your research. Once the app is installed, open it up and click Open Account. You'll then want to select your country of residence. That's where you live. You'll then put in your nationality, aka where your passport's from, and then your name. You'll then have to put in your date of birth, your phone number, where you pay taxes, your address, your national insurance number, and that will finally bring you to the screen where you select your type of account. Once you've completed all of your information, you'll be presented with the option of choosing 3 account types. Now, I recommend you click off CFDs. This is for trading complex derivatives and using leverage, and unless you're an experienced investor, you can lose a lot of money. The ISA is a tax efficient wrapper. If you want to use your ISA on Trading 212, go ahead and do that. I'd probably do your own research on this. However, for this video, we need to click on the stocks and trading account. This is how we're going to invest in stocks and shares and funds. Okay, you're now almost there. You'll need to select your account currency, your role you work in, what industry you work in, where the source of your deposit's coming from, and agree to the terms and conditions. You'll then be able to put in your email address and password to make your final account. Well done, you're all set up. Okay, you're now on the app's main front page. You'll want to click on the menu in the bottom right and scroll down to the promo code bit. Click on that and insert a promo code if you have one. I would love to give you one, but because I've signed up after the 11th of January for this video, I'm not provided a promo code. You'll have to Google to get one. I found one on the Reddit page for Trading 212. Now, if you do this and you put money onto your account, then you'll be given a free share with a value of up to £100. Okay, you're pretty much there. You've set up your account and you've funded it and you've used the promo code if you have one. So what do we do now? Well, there's 2 main choices when you're investing. You can either invest into an individual stock or into a fund. An individual stock means you're buying a part of one company. So every company in the world has a number of shares, and each share is a percentage of that ownership. So if a company has 1,000 shares and you buy one of them, you've bought 0.1% of the company. Generally, a company will pay a dividend. So every year it pays a percentage of its profits to everyone who owns a share. So if a company has 100 shares and they pay £100 out as a dividend, then you would get £1 for every share you have. Now, if you invest into a fund, you're effectively investing into a huge number of companies. There's lots of different funds that invest into different things, different countries, different stocks, or different sectors. If, for example, you invest into an index of the S&P 500, that'll be roughly the top 500 companies in the USA. The reason to invest into a fund over an individual stock is it provides diversification and it ensures that your return will be roughly the market average. However, if you invest into an individual stock, while you have the potential to massively outperform the market, you also have the potential to massively underperform the market. Stocks are high risk but high reward. If you're a new investor, it's generally far more sensible to invest into a fund that will diversify you and keep your money safe. Let's take a look at 2 examples. We're going to go down the stock list and pick one at random. Here, how about Snapchat? If you take a look at the graph, you can see the price didn't do a lot for a huge amount of time. In fact, it went down for a while, but in the last year, it's gone up significantly. This really shows how volatile stocks can be. And not all stocks will go up. Sometimes they will just continually go down until they reach a nil value and go bankrupt. On the other hand, if we go and take a look at an index, such as the S&P 500, you can see its graph is a lot more stable over time. There's still volatility and it can drop, but as a general rule, it will go up in value over time. The risk with a stock is that its value may never recover. Yes, in our Snapchat example, it did eventually rise up significantly. But if you think of other companies that have gone bust over time, such as Enron, you could have lost all of your money. However, it's very unlikely a fund covering hundreds of companies will go bust. And if it does, then the whole economy is in serious trouble. So what to invest in? I can't tell you directly what to invest in because I'm not a financial advisor. And if I did, I would get fined by the FCA. However, I can tell you what I would do if I was a new investor. If I had about 1,000, I would put 90% of it into funds and 10% into individual stocks. When I was looking at the funds, I'd be looking at big reputable ones. So for example, the Vanguard FTSE 100. That's the top 100 companies in the UK. Or the Vanguard S&P 500. That's the top 500 companies in the US. Or maybe the Vanguard All World FTSE. This is a range of mid-cap companies all across the world. By investing into those three funds, I would be really well diversified. I'd be diversified, protecting me against individual company risk, but also geographic risk. Even if the entire UK economy collapsed, I would still have my funds in the US and all around the world. Now, the reason I'd also put 10% into individual stocks is because I think it provides a fantastic learning curve. By putting 10% into companies that interest you and think will perform well, for example, Apple, you'll get to see how they compare to these indexes. You'll see that an individual company can outperform or underperform the market. So how do we actually buy it once we've decided what we want to buy? Well, it's very easy. Just go to the stock in the app, click on it, click buy, select the amount that you want to purchase, either in value or number of shares, then review your order and click confirm. Once you've done this, as long as you're on a trading day, aka Monday to Friday and between trading hours, then you'll see the stock appear in your portfolio and your cash balance in the app will decrease. Well done on making your first ever investment. There's one last feature that you should know about on Trading 212. Trading 212 recently introduced pies. Pies allow you to put a number of stocks into a pie, and it means that whenever you invest into a pie, you will invest into those stocks that are within the pie. Now, the interesting thing about pies is that you can also copy other users' pies who have made them public. Now, if you go to the list of pies, you'll be able to scroll down them. If you click on them, you can read the descriptions and the themes, and you'll be able to see what's inside of each of the pies. You can then click copy pie and either invest directly or invest automatically each month. And every month when you invest into this pie, you'll automatically invest into all the stocks within the pie. Now, this is good if you want to invest into a certain sector, for example, gene technologies, but you don't want to do that yourself, and you cannot find a relevant fund on Trading 212. It's a new feature, it's pretty cool. The only thing that I would say is be careful about who you're copying. There's a lot of wannabe investors who have made these pies and they've advertised them widely on YouTube, TikTok, or wherever it may be, but they don't really know what they're doing, and it would be extremely risky investing with them. The other thing to remember is that some of these pies are deliberately high risk and high return. For example, a pie focusing entirely on electric vehicles, while it might outperform the market considerably, it is very risky as you're in such a concentrated sector. Once you've made your trades, you'll be able to easily track your performance in the app and sell any of your holdings if you so want to. You can also easily withdraw your money through the menu. The last thing that I would like to add is investing is much like planting a tree. The best time to plant a tree was 20 years ago, but the second best time is today. And that same quote applies exactly to investing. The longer you invest, the better your returns will be. And based on historical performance, those who invest will massively outperform those who hold their money in cash, the bank, or bonds. The difference that this will make over your life is hundreds of thousands or millions. And because of compound interest, it doesn't take a lot of money to be exceptionally rich by the time you retire. If you invested $10,000 at the age of 20, by the time you were 55, it would probably be worth over $200,000 if it was held in the stock market. It would be much less if held in the bank. If this video provided value, or you think any of my future content can provide value to you, please hit that subscribe button. Going forward, I intend to make videos on a huge range of financial topics. If you haven't seen my past videos, I explain why I think the UK stock market has underperformed and will continue to underperform, and I've explained how you can copy senators' trades. There's a load more topics that I want to explore, interesting facets of finance all over the place, from beginner to experienced investing. Alright, that wraps things up. Please like, comment, subscribe. If you have any questions, please feel free to put them in the comments, and if there's any content you would like to see going forward, please put that down as well. I'm happy to adapt what we do based around what people would like to see. See you later.